Welcome back to the Discount Property Investor Podcast. Our mission is to share what we have learned from our experience and the experience of others to help you make more money investing like a pro. We want to teach you how to create wealth by investing in real estate the Discount Property Investor way. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. Thanks for tuning in.
All right, guys, welcome back to the Discount Property Investor Podcast. This is your host, David Dodge, and today I got a special guest, Stefan Tsvetkov. Did I say that right?
That's good. That's great, actually.
Stefan Tsvetkov, I think I'm saying it right, from RealtyQuant, but Stefan's an investor too. And before we started this episode, I was telling Stefan, about the show and about how, this is the Discount Property Investor Podcast. Let's talk about buying deals and how people can find deals and what kind of marketing it takes to get into deals. Because as we know, you make your money when you buy, you get paid when you sell. And if you get a deal, you have a lot of exits. So I'm just excited to have Stefan on today to tell us about data-driven, methods. Stefan, welcome to the show.
A pleasure to be here. Thanks for having me.
Man, I'm happy you're here. I'm really happy you're here. Tell us about RealtyQuant.
Yeah, so RealtyQuant is it's really kind of my mission for data-driven investing in the real estate industry. So we publish different market data, market analytics, and also it's an investment company. It's also my investment company at the same time. So it's really using in-house data models to find basically discounted properties. So that's really what everybody wants to find, right? And inefficiencies in the real estate market. So what are some ways? So for example, so when I started a few years ago as a exclusively residential investor, and I've been transitioning to the commercial space. But what I would do is, so I'm in New York City. So I would go to just for the benefit of your audience. So I would go to various online sources, and I would pull, let's say, about 6,000 multifamily, small multifamily properties in the New York City area. So that when I say pull, it would mean, at the time it would mean web scraping various resources, and that's on market. And then there's of course the off market component that is very important. But really on market scraping thousands and thousands of listings. And now most investors, they would say, okay, that's, there's no inefficiency once it's on market. It's not a discount. It's already on market. Agents have priced it in. I have found amazing deals, even actually like that, because you have 6,000 multifamilies and you're looking at the whole distribution and you take the top 0.1%, you're going to find something good. And especially in some parts, in markets that are more inefficient. For example, in my area, that happens to be upstate New York. So, so I did different strategies. I did condo conversions by New York City. So that's something I still do now. So condominium conversions. So that's taking a multifamily, splitting it in condominiums, and so the multifamily is not discounted, but there is this kind of value add that if you just legally separate it, the sum of the components is bigger than the whole, this kind of perspective. So that's one strategy. With data-driven investing, I've discovered deals such as, a 4-unit that happens to have a 4th auxiliary unit.
Okay, so here, I got to stop you for a second.
Yeah. Mm-hmm.
You got a lot of knowledge, and I'm following you, but I don't think that the audience is per se. So let's slow down a little, but I can tell you have a wealth of knowledge, and I'm happy that you're here today because we're all going to learn something. This is great. So you say data-driven. Let's talk about that. What does that mean to anybody that doesn't know anything about real estate or data?
Data-driven means investing means trading properties in a way similar to the stock market. So you would write scripts perhaps, or have people on Fiverr or whatever write scripts for you. They would pull all the properties data. You would have them fully underwritten for you. You would have all your cap rates, cash on cash return, perhaps IRR that you're going to have, what returns are you going to have on that property potentially. And you would do this at scale.
Okay, that's my next question. So you're doing this at scale and you're building a list, right? Then what are you guys? So then are you stacking different levels of motivation by using the data to basically say, hey, you're going to have a higher likelihood of buying this property here or these properties here versus just trying to mail to the entire list?
But that is you're speaking of the off-market kind of direct mail, like lists and kind of like to your point, like finding motivated sellers.
Yep.
That is a viable strategy as well.
But you're doing it on market with this?
That part is on market.
Oh my goodness. Okay. Hey, I'm learning something new. I don't typically talk to people that have a bunch of on market strategies. So I'm very interested to hear more about this. So by you pulling all this data and doing it at scale, how does that help you market? It doesn't, does it? Or does it?
I mean, so let's split your point, like on market and off market. So on market, you don't need to like send direct mail, right? Because there's already properties on the market. Presumably it's not discounted, right?
True. I guess you don't have to spend money on marketing to generate the lead if it's online already. Okay, got it. So then you got to reach out to the agents to make offers and start the line of communication.
Exactly. So that's like, I mean, it's like the straightforward way. I agree. It's just the concept there. What gives you the advantages by doing it data driven, you can actually discover like the top 0.1%, let's say, something like that. So that's kind of the way you do on market. Because to your point, if you do on market the standard way, you just open Zillow and do whatever, you're not going to find any deals. But if you pull like 6,000 properties from Zillow, then it's going to be a different approach, right? So it's a different, it's a different mechanics there. And so this is, this is one approach. For off market, I've done it in the commercial space. One can do things such as, I'm not sure if you have any commercial investors in the audience, or you want to speak to the residential only. I just want to make sure.
We do. We have all of the above.
Sure, yeah. So for commercial, like what is the data-driven off-market method, for example, there? So one can pull rental listings data from places such as apartments.com and model like for thousands again of properties, which ones have a bigger value add. That's an example of a data-driven method. So then you're going to target your mailing list not based on, okay, you just pull a single county and you mail that county every single property there. You're actually going to send mail to only properties that have shown potential to improve their NOI, to raise the value of that property. And you're going to do it perhaps across geographies. You would also do like sort of market analysis where you can do like in a data-driven way, you can run like appreciation forecasts with various like forecasting models, for example. And again, like to some of your audience, like you're going to say, okay, they're not going to do this. Well, they can use like different vendors and kind of like put pieces together, be it through my company or be it, hire like contract labor online and so forth. And so, but this is really what they do. I mean, this is really what they did at the time. And they found many deals like that and many different strategies as well. And like some of the flexibility of that is you can actually tune it to, let's say, 5 different strategies, and you can kind of have all your properties underwritten and ready to go. You just have it in a very, kind of streamlined, easy manner. And so in the commercial space, like in that example, so that's a much better, if you have something like Prospect now, but if you do this deeper analysis of actually modeling the value add of properties, well, that's that's like a better list, right? Now it's kind of similar to your point, if you're looking for motivated sellers, it's just more focused on the NOI perspective rather than the seller motivation in this case. It's more like focus, okay, is it actually, if you're sending direct mail to a building that has all its rents at market, perhaps it's not particularly useful. So
makes sense.
So that's like, these are some examples. There are various other things such as using value estimates. And again, I'm just speaking like I'm a finance guy, like I'm a financial engineer. So speaking as for example, things like Zillow's estimate, if you take now, that's an automated valuation. So those are using like various, one can subscribe to vendors using various tools for automated valuation, can foster finding discounted properties. Now I have done this like upstate. So upstate, I would run my own in-house RealtyQuant automated valuation. And I would pull like, let's say 1,000 properties upstate. And because that market is illiquid, so they could be on market, but because the market is illiquid, even though they're on market, they're discounted sometimes.
Oh yeah,
so
absolutely.
10, 20% discounted in some case relative to where they should be. It's just the agent priced it incorrect or something like this. But again, like to be able to do this, on markets, again, to that discussion, you have to do it data driven. There's no other way to do on market, because to your point, it's, like you don't expect to particularly find many deals, right? And it's really the ways to put like the whole distribution of properties and kind of look at, at the tail of the distribution, the very best ones. And so, so that is like, that is another perspective. Then there's various other kind of technology pieces that assist in this. And, there are things like, how do you evaluate the condition of properties? Now, if you want to do it in a data-driven way to discover deals, now it's very important, the condition. And so there's like various artificial intelligence, machine learning tools one can use to kind of score condition. A company in New York called Foxy AI, for example, does it. And again, this is just a perspective of where, to some of the techier part of your audience, they may want to, okay, we're just going to do our own Python scripts or something. Sometimes I personally know a few people who do it. They would just write their own Python scripts and kind of try to find deals, try to find deals.
Yeah, most of my listeners don't know about Python scripts because they're looking for, they're just trying to get into deals. This stuff like the back of your hand because this is what you do, and I love it. So, hey, let's take a shift here and have some fun. You have mastered data-driven. You're talking awesome stuff that is kind of going over my head, but I'm glad because that means that you know it. You got this stuff. You have a passion, man. You are on a mission to add value through education, investment, technology, and analytics, man. It's awesome. So how has this data-driven approach helped you? Tell me about your real estate investing career and portfolio.
Yes. So my career, so I do like short-term equity gain, so flips basically in the New York City area. I do.
Are you doing multifamily ones or single families or commercial? What kind of properties are you targeting?
Small multifamily. So like 3 to 5 units typically is where it falls.
Sure.
Yeah. So let's say my current projects, just to give an example. So I have 4-unit condominium conversion in downtown Jersey City. So it's like 1.65 million. It's a 4-unit, but it's kind of expensive, right? Because like by New York City. And so that one, I discovered it again, like with data. And it's just the way I discovered it is I try to, I pull the data for what condo prices are, and then pull like what the multifamily prices are and try to find the discrepancy. And condominium conversion, again, to your audience, is really just legally separating the property, the multifamily into condominiums. And it's a viable strategy in like primary markets, places like New York City and in this case, downtown Jersey City. And so forth. But this deal happens to have a really nice, like 4-bed, 2-bath, single family house in the back of the property. And so we are actually hiring kind of a high-end contractor to make it like super nice with like custom finishes, make like an amazing single family house in this private market. And we're targeting probably like 1.2 million for the back house alone on a 1.65 purchase for the whole property. And so that's like a deal also I discovered through data. Another condominium conversion in New Jersey, WeHawk, and so just 3-bedroom apartments, again, like make it into condos. I've done deals like where I mentioned I purchased a 4-plex upstate and I essentially did zero renovation. I just added, just the 5th unit was not made legal with the town. So it happened to have a 5th studio apartment. So essentially the valuation method changed from residential to commercial. The property value kind of doubled through that. So that's another example. I've done a few like just rental properties that I still hold in New Jersey, like Hudson County, New Jersey. So it's really like small multifamily, basically. It's what I've been doing. And I've been transitioning to the commercial space. And so I was bidding on a 48-unit in Iowa more recently with like one of the bigger syndicators from New York City as a partner. So that was a pretty good deal. Like IRR seemed to be very high. But again, I have like some uncertainty around the valuation there. I felt it's a little bit price high. And so I think I'm gonna pull back from that.
I like it, man. Well, you got your hands in multiple projects. You're making moves. You're doing deals, and you're doing this all in a data-driven approach, man. I think it's awesome. It's very cool. If somebody wanted to connect with you or to learn more about RealtyQuant, is that something that you offer as a service, or is it like a product that somebody could use to help themselves, or what is it?
Yeah, so RealtyQuant, we offer market analytics currently. So we offer appreciation forecasts and downside forecasts. It's actually very relevant at the current time. So with the potential prospects of a recession, it's essentially we have estimates for how over, under, fairly valued basically every county in the country is. So we have data for about 2,700 US counties. So it's really gonna tell you, okay, is your market, super overheated, or is it perhaps underheated, and that's what it does. So we focus on the market side as far as what's published out there for people to use. But in-house, I do lots of property data-driven stuff and analytics as well. Mm-hmm.
Awesome. Very cool. How would somebody connect with you, Stefan?
So RealtyQuant.com. That's the best way.
Awesome. Very cool, man. Well, I'm super excited that you were able to make this podcast episode with me. What would be, one tip that you would give to a new investor that's, looking to get their first deal?
Looking to get their first deal. I mean, I guess house hacking is something probably other people say as well. I did that. My first deal was house hacking, a fourplex in New Jersey. I was pretty happy. I was living rent-free. So I think that's a great way to get in and get like the best mortgage, the best lender terms, and purchase a multifamily this way.
Hey, Stefan, that was the first deal I ever did was a house hacking deal. The first 3, actually. So I agree, 100%. Great tip, man. Guys, listening to this guy, he knows what he's talking about. Stefan, thank you so much for coming on. Guys, check out RealtyQuant.com to learn more about Stefan's site, data-driven. He's got information on trends, every county. Sounds awesome. I'm going to check it out myself. Stefan, any parting words for the audience today?
No. So you have a great channel. So just to make sure to check out all your episodes and learn as much as they can. That's all.
I love it, man. Thank you so much for coming on, guys. There'll be a link in the show notes as well. Thanks for listening. And with that, we are signing off.
Thanks for listening to the Discount Property Investor Podcast. If you enjoyed this episode, please like, share, and subscribe to help us reach a wider audience. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. We would also appreciate it if you left us a review on iTunes or Stitcher. Thank you in advance for your support. And remember, you make your money when you buy, you get paid when you sell. Now let's go build some wealth.